Assalamualaikum and welcome back to Bursary Program. So today we have
Bintai Kinden Corporation Berhad,
which expertise in engineering service and medical healthcare provision.
Without any further ado, let's get into MFRS.
MFRS 8 is an accounting standard that requires organization to break their operation into segments that are reviewed separately by CODM so that users of financial statements can see how each part of the business is performed. Operating segments is a component in the company that has three criteria which engage in business activity, has been reviewed regularly by CODM and has all of financial information available to be tracked. Once the operating segments are identified, we need to determine which one is reportable. A segment is reportable if it has at least 10% of company's revenue or profit or loss or assets. Additionally, total reportable segments together must cover at least 75% of company's total revenue. If the requirement is not satisfied, the company can include additional segments or can combine segments that has similar criteria. CODM is a chief operating decision maker. It's a function, not particularly a person, that allocates the resources, decides how each part of the company is managed, part is doing well. It could be CEO, CCO, CFO, and board of directors. Title doesn't matter as long as they make these strategic decisions. And this is Datuk Tai Chorhan, a CEO of Bintai Company, while COO of FarmFresh is Loy Tuan E.
Next, let's move on to the types of segmental reports used in financial reporting. There are two types of segmental reports commonly used by many companies, namely business segments and geographical segments. A business segment is a division of a company that does its own type of business and earns its own revenue, separate from the company's other activities. Meanwhile, a geographical segment is a part of a company business that is divided based on location or region. For example, based on Bintai Kinden's interim financial report for 2025, the company reports its performance using business segments. These include mechanical and electrical engineering, concession arrangement, and investment holdings, and others. From these segments, the Mechanical and Electrical Engineering Division contributed the largest share of revenue at 4,038,000. However, despite generating the highest revenue, it recorded a loss due to project-related costs and ongoing operational challenges. Let's take a look at another company that uses geographical segments in its financial reporting. The company that I choose is FarmFresh Berhad. In its 2025 interim financial report, Malaysia contributed the highest external revenue at 241,940,000. Malaysia is also the only geographical segment that generated profit for the period, while its operations in Australia recorded a loss. Through these two companies, we can clearly see how entities may choose to report either business segments or geographical segments depending on how their management monitors performance and allocates resources.
Next, let's move on to the benefits of segmental reporting for financial statements. The first benefit is better evaluation of profitability and performance by segment, rather than relying on overall company result. Segmental reporting helps users access how each business unit contribute to revenue and profit. Segmental reporting also gives users a much clearer picture of how each business unit is performing. From the segmental table for this company, the mechanical and electrical segment contributed 4,038 million ringgit, while concession arrangement contributed 3,555 million ringgit. Ultimately, segmental reporting enhances users' ability to perform accurate performance comparison. The second benefit is enhanced decision making for investor and creditor. This will help investors to know which segments generate strong and sustainable cash flow. This also allows them to judge whether the company is financially stable. For this company, as you can see, mechanical and electrical engineering generates most revenue but carries highest operational risk since the companies have loss before tax amounted 1,470 million ringgit. But for concession arrangement, this segment shows a stable revenue that this company have a reliable income. What interesting about this company is the contrast between the mechanical and electrical engineering segment that brings the most revenue but is volatile, while the concession segment consistently generates stable profit every quarter. The balance of the high risk and steady income is the most unique point about the company.
Bintai Berhad was classified as PN17, meaning it was financially distressed according to Bursa Malaysia. As part of the company's regularization plan, Bintai completed the proposed placement on 24th March 2025. followed by the proposed share capital reduction on 21st May 2025. The purpose of the capital reduction was to cancel accumulated losses, strengthen the equity position, and improve the balance sheet, and to prepare the company for PN17 upliftment once it's achieved 2 consecutive profitable quarters. What does it affect? The capital reduction reduces share capital and accumulated losses that will improve the equity. However, it is a non-cash adjustment so that it does not affect profit or loss or even cash. Moving on to the next significant event, that is Employee Share Option Scheme or ESOS. During the quarter, the company granted share option to employees with a fair value of 3.70 million, or to be precise, 3,698,000. The fair value of ESOS must be recognized as expenses, even though no cash is paid. This is confirmed in the quarterly report, where it states that the loss before tax increased, mainly because of the recognition of 3.70 million ESOS of the fair value. This causes the company's loss to increase for the quarter. The share option reserve in the equity will be increased because it is a non-cash item. It is presented under operating activities in the statement of cash.
Moving on, we will take a look at the interim financial statement. For Bintai, Kinden, Berhad, the interim reporting period used for both current and comparative interim financial statement is the second quarter of the year 2024 and 2025. We will take a look at the statement of profit or loss and other comprehensive income, statement of changes in equity, statement of financial position, and statement of cash flow for both current and comparative period.
This is the statement of profit or loss and other comprehensive income of Bintai, Kinden, Berhad for the second quarter of 2025 and 2024.
Revenue increases from the comparative to current quarter amounted to 2.248 million. The profit before tax decreases by 1.817 million. The net profit also decreases by 2.077 million. Earning per share also decreases by 0.18 in this current quarter.
Next, we have the statement of changes in equity for second quarter of 2025 and the second quarter of 2024.
Total equity decreases by 2.426 million from the comparative quarter. Share capital decreases by 141.472 million. Share option reserve increased by 10.637 million. And accumulated losses decreased by 113.857 million.
Moving on, we have the statement of financial position for both 2025 and 2024.
The company's total asset, total liability, total equity, and net asset per share all decreases by 19.014 million, 9.588 million, 9.426 million, and 1.17 million respectively.
Lastly, we have the statement of cash flow for second quarter ended 2025 and second quarter ended 2024.
Net cash from operating activities increases by 80,000. Net cash from investing activities increases by 883,000. Net cash from financing activity decreases by 1.256 million. Net cash and cash equivalent increases by 16.585 million.
And that's all for us. Thank you for watching and tuning in. Bye-bye!